So, what the heck is going on with the Denver metro real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group. Every single month, we bring you the latest market stats, vital signs, if you will, for the Denver real estate market. We look at it month over month, year over year. We look at longer term trend lines so that if you are in the market or planning on entering the market in any capacity, whether it's to sell a home, buy a home, or sell a home to buy a home, this will help you determine the best time. And stay tuned. At the end, we'll tell you how to leverage this data to make the best real estate play for you. So let's get into month over month. So the biggest mover of the month is, believe it or not, new listings falling by 12.6%. Yes, it's the third straight month that new listings in the Denver metro have actually gone down, this time again by almost 13%. Now, with that comes available homes or inventory, if you will, also falling for the second straight month, down by 5%. So we're approaching now 14,000 homes on the market in the Denver metro. It is a 7-county area. So if you want this more localized, just drop a comment below. Happy to make this report specifically for you. So new listings down, inventory down. New purchase contracts went up, albeit by 10, going from 4,073 to 4,083 in the month of August. So with new listings down and purchase contracts slightly up, that does bring the total inventory down. Now, should have mentioned this earlier, the color coding that you see, if the metric is in green, and there's 9 metrics that we're looking at here, if it's in green, it is moving in favor of sellers. If it's in red, it's moving in favor of buyers. So almost not quite an even split, but some good signs for the sellers who are out there. The other one that's in green, the average price. Now I'm going to caveat this because it is the average for what sold in August compared to the average for what's sold in July. So it's not necessarily indicative of values across the board. Yet up is up. And the average price is up 2.8% to just shy of $740,000. Now, flip side, the trends that are moving in favor of the buyers. Well, first and foremost, market times got longer for the 4th straight month. The average days on market up 10.2%. That number is 54. The median days on market up 11.8%. That number is 38. Again, 4 straight months of rising market times. So when it's taking longer for homes to sell, you as a buyer gain more leverage, and it's showing that you have less competition in that regard because, again, homes taking longer to sell, though purchase contracts would tell otherwise. Now, closed sales, even though purchase contracts went up, closed sales, which is more of a lagging indicator, went down for the 3rd straight month, this time by 4.6%. Median price down slightly from $598.5 to $596,750, good for a 0.3% drop. And lastly, what I call the leverage ratio, which is the median sold price to final list price, is down 0.3% to 99.46. So that means the median home is selling for a 0.5%, a little over 0.5% discount from its final asking price. Now, why is that the leverage factor? Well, when you see that number above 100, that means that buyers don't really have a whole heck of a lot of leverage in negotiating deals. Below 100 shows that the leverage is moving their way. So there's the month over month report. Now let's look at this from a year over year standpoint, and let's get to the right month first of all. So same thing, if it's red, it's moving in favor of buyers. If it's green, it's moving in favor of sellers. Almost a 50-50 split. 50-50 is impossible because it's an odd number of metrics. But let's get into, again, the biggest mover first, median days on market up 30, we'll call it 36%. Last year at this time, median market time was exactly 4 weeks, and now it's moving closer to 6 weeks at 38 days. Average days on market also up 25.6%. Available inventory, been the story all year. Year over year measure is up 24%. Last year, this time, 11,000 homes and some change. This year, as mentioned, 14,000 homes sitting on the market. Purchase contracts down ever so slightly, 0.5%. You would think, given how the Media reports it that purchase contracts will be down 100%, but really they're down 0.5%. Closed sales, though, on the other hand, down 5% year over year. But look at this. We get to prices, and we've been tracking some red months as of recent. But this month in August, all of the year over year changes are in the green. Again, that does favor sellers. Average price up 1.8%. Median price up 0.3%, not much, but up is up. And the leverage factor, as explained earlier, is up 0.3%. New listings fell by 7.7%. So why is that green? Well, that means less. If you're a seller on the market, you have less competitors come to market this August than you did last August. So given that, and with sales kind of, we'll say leveling out, and less listings hitting the market, we're likely to see the inventory numbers continue to drop. Now, let's look at this from a longer term perspective. Bear with me, we do track a lot of markets. Now, this is a 3-year run of all the metrics that we discussed, more in a visual form for my visual people, myself included. And we'll start just kind of at the top here with average and median days on market. Average in the blue, median in the red. And just waves. Best way to explain it, those waves are cresting in the winter months, November, December, January specifically, and they're at the bottom in the spring months. And same thing applies to 2025 as did 2022 and, frankly, beyond. Reason I'm starting this in August of 2022 is essentially that's when the rising interest rates started taking a hold of the market and determining the market conditions that we're in now. So again, big story here, not much of one, it's just waves. Now, the 3 metrics on this graph may be a little bit confusing, but I like to see the relationship between available homes in the red, new listings in the blue, and new purchase contracts in the yellow. And I'll explain why here in a minute. But first, let's look at the inventory. Ups and downs, although the last couple years, the ups have been far greater than the previous 2 years. As we topped out over 15,000 homes for sale just a couple of months ago. But you can see on the trend line, that is 2 straight months of declining inventory or reduced inventory. And I expect that trend to continue at least through the end of 2025. So that's good news if you're a home seller, because look at the yellow, that's the new purchase contracts. When it felt really, really slow as a home seller, the gap between the red and the yellow lines were at their widest. So when, typical selling season of April, May, June, that's when that gap was widening. More homes on the market, and the number of purchase contracts, frankly, kind of just flatlined and started going down after, March. Been a slow trend downward. Now, for comparison, at the beginning of this graph, purchase contracts were 5,700 and 5,000. Yet you look at the last 3 years, 23, 24, 25, it's not that much different. The number of purchase contracts, really not that whole heck of a lot different in any one given year than the other. So all the talk of, less buyers out there, less people buying, it's simply not true as told by purchase contracts. New listings, on the other hand, those go up every year, starting in January, and they did peak out this year. It's just shy of 8,000 in, May, and have, like I said, been reducing for the last several months. Same thing last year though, 7,400 was the high. Year before that, 6,100 was the high. So more listings hitting the market, less people in that lock-in effect, willing to bring their homes to market. And frankly, only about half of them sell. Half of the homes that have hit the market in the Denver metro this year have failed to sell. So thus leading to that huge rise in the red line, the available homes, with the, again, purchase contract activity remaining pretty steady over the last few years. Closed sales, ups and downs, not a big story there. The ups this year, not quite as high as the ups last year. The ups last year, not quite as high as the ups the year before. But look at this. We're talking about a difference between 45.94 at its peak in 23 and 42.93 at its peak this year. 300 homes, that is what, 7-8%, something like that. So yeah, that's the story there. Now, lastly, average price in the blue, median price in the red. Overall trend is pretty flat, quite frankly, over the last few years. And you can see kind of the seasonal ups and downs that go along with it, but it's not trending up or down really, as you'd expect, again, if you listen to mainstream media. And then finally, I know I said finally before, but median sold price to list price ratio. No real trend in any one direction. Yes, there were a couple months that peaked over 100%, meaning in those months, sellers did carry more leverage in their sale than the buyers did. But it's really hovered in that 98 to 100% range the entire time this tracking goes on. So there you have it. Long story short, again, I'll go back to the month over month. Long story short, new listings are reducing every single month. The number of listings hitting the market are going down every single month. That trend should continue at least through the end of the year, probably into mid Q1 next year. We'll start seeing that go back up. That's going to bring the available homes down, the total available homes down. Purchase contracts will likely continue to, well, I shouldn't say continue because they went up last month, but will likely go down through the end of the year and into probably February. It will feel, days on market probably will hover right around there, or maybe go up a little bit from there. Prices will fluctuate, average selling prices for the month, that is. And this is the new normal that we're in, basically. So yeah, we might catch a break in interest rates here in the next couple weeks. Already have, and maybe it's already priced in as rates went south of 6.5 yesterday and continued declining again today. 6.45, I believe, is the number. So if you're a buyer out there, go take advantage of the most homes that you'll probably see on the market for the next maybe 8 months, 12 months. We'll see. And if you're a seller, just make sure that you are priced accordingly and you make your home the absolute no-brainer. And if you want to do that, reach out to us, drop a comment, find me on social media. Again, Sean Reddy, Keller Williams Reddy Group. Love to be a resource for you, and thanks so much for watching. We'll see you next month in this segment.